Have you ever felt your money losing its value, almost slipping away? Have you noticed that when you spend the same amount this year for a grocery shop you could afford last year, one of the bags is missing? That feeling, that missing bag, has a name: inflation. An invisible force is quietly eroding the purchasing power of every hard-earned penny without us even realizing it. This video will, for the very first time, allow you to see that invisible hand clearly. We will show you what inflation really is, not just a term confined to the finance pages, but how it impacts your daily life. And most importantly, we will guide you step by step on how to protect your money and even grow stronger against this invisible thief. In this episode of our personal finance series, we will get to know our biggest enemy and learn how to defeat it. Inflation does not affect everyone equally. It is like an unjust tax. It takes a lot from some and very little from others. In a country experiencing inflation, the biggest losers are usually those who hold cash and those with fixed incomes. Conversely, the relative winners are debtors and asset owners. Now, let's explain why. The biggest losers: those holding cash and fixed income earners. If you are holding cash, you are inflation's primary target. $10,000 sitting in your bank account in an environment of 50% annual inflation will effectively have the purchasing power of only $5,000 at the beginning of the next year. Your money hasn't disappeared, but its value has evaporated. Similarly, those whose salaries increase less than the rate of inflation, or those trying to get by on a fixed pension, are inflation's hidden victims. While their income remains the same, their expenses rapidly multiply. The relative winners: debtors and asset owners. On the other hand, inflation is the debtor's best friend. For instance, suppose you took out a $100,000 mortgage at 10% interest. Let's say inflation is 50%. In this scenario, you pay off your debt using a much less valuable version of the money you borrowed. Furthermore, those who own real assets like real estate, stocks, or gold tend to get wealthier because the value of these assets usually increases at a rate higher than inflation. This is a subtle transfer of wealth from those holding cash to asset owners.